Welcome to TradeTheNBI.com. This is John. This report is for the 3rd, and you can see, well, we talked about this one. Let me put the ES up first. That would be the best place to start. Well, right back here, polls started to change, and we recognized that if anything was going to happen that was out counter to the expectation of HRC, that we would see a push down in the market. So we ended up with the DOC spread that started here, began to galvanize just a tiny little bit movement, but we get support right there around that 21.26 as well as the other ABMs. But then orange broke below into the range between red and cyan, which is usually a continuation move to the lower side, followed up by the break of the cyan below. The steel below cyan, which is also a secondary short signal. And at that particular point, that's when the dam broke through. That 21.26 became the resistance, and it couldn't hold, and boom, we've cascaded lower from there, and not even oversold at this particular point. It's been a subtle move. Nothing too dramatic, but still, we pointed out that this is exactly what would happen if things moved counter to the expectation, because we were on a nice slide to buy. This will present issues, like I said, moving towards the end of the week here and the beginning of the election week with funds. It'll be interesting to see if we get any buy signals going into that, because they'll have that excess money on discounted price. And again, the expectation will be a higher price anyway after the election is over as we ride towards the end of the year. Fed not doing anything in particular, doesn't really mean much. Anyone who thought they were going to do anything was fooling themselves, but that's okay. We can have difference of opinion on that, but the market doesn't lie. And this also is an indication here of euro major bounce back, and there's no real fundamental reason for that. It's just got way overdone. Tested new lows, higher extreme, and then boom, we began with the dip below the green. Dip below the red DOC with the orange, and then we started rising shakeouts, and now we're a bit overbought at this particular point. All it did was return right back to the mean. TLT, a little bit of support there. The fact that there won't be any short-term rate increase, but still, they're increasing the probabilities for December, yada, 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 and we don't care. We're just going to follow what the chart tells us. And likewise, oil plummeting on the news there as it continues to drive lower. We're getting close to the point, minus 86. We look for a reversal, so we could get into an extreme oversold as we come back to retracing the entire move pretty much that took place. Inventories it's a problem, and it's going to be a tough one for oil to sort out as it narrows the producers in order to even out supply, and particularly with no growth. This is really the issue. It's all about no growth, and you have to maintain that given what you've got for deficits in that, because slight increases in interest rates could be catastrophic from a budgetary standpoint. So GLD flattening out. I think that's probably as much as you're going to get out of this move. It's overbought at this particular point. It started getting overbought the other day. Positive checkout here. Orange continuing to break down, and now you have cyan under red. So, but all in all, it probably is likely to move across, but it still can continue higher at this particular point. So, worth keeping in mind. And here we have the 5K tick. It started to have nice little pop buy signals, and then we got up to the peaks, and then we broke down, and then the short algo was never breached. Once the long algo came to it and couldn't break it, right at that bar as it started to break down, that was enough to signal it, and then from then it was just a cascade lower, and then we ended up with a few little buy signals as we dipped down. We ended up with a little bit of the return there with the steel coming below, and it produced some decent gains until we ended up with another DOC spread here as we got over to the peak point. Right about there, we turned red on this break move, which was right around 2098. Yeah, we've dropped a good 6 points since then, so nothing too dramatic. Where are we currently at? 90 and a quarter. So, all in all, I don't see things being too far out of our expectations. We're going to continue to watch that daily setup as we approach near the election. And if things continue to deteriorate poll-wise, then you might see a little more gravity. But there's going to be a lot of powder on the sidelines ready to attack. It's just a matter of waiting for an appropriate moment. And like I said, there's going to need to be some sector rotation given change in expectations, and now the probability maps also have to be adjusted as to what are the probabilities HRC versus DT. We just go to the symbol names as opposed to actual names, and at that particular point, we'll get a better idea of when we start to see money flow back in that's going to have an impact. So we'll just go with it as it happens. As always, though, you can't fight the strength of that, so you just have to stick with it. It doesn't matter what your belief is. You can have an opinion one way or another. It doesn't make any difference. We just have to see where the money goes, and where the money goes, you want to follow. So that's all I'm saying about that issue. And we're going to see it, so we might as well go with what we see. As always, trade well. We'll talk in later. See you on the Skype chat.